Well, you know me personally. In this instance, I'm a day trader, so and specifically an intraday trader. So I don't swing trade, I don't long term. So I pay attention to the price action as it is, and I traded it. So of course, naturally, after it opened and squeezed a bit, I shorted the junk out of it, and I rode it all the way down to 384.
Hello, good afternoon, good evening, good morning, anywhere you are, BBT. Welcome to another episode of After Hour with Traders. Today is absolutely a special episode because we're with Brian. Brian, welcome.
Hello.
And from sunny Florida, we have Mr. Thor Young.
Hello.
Welcome to the Matrix. Did I say that right?
Yeah.
Because you just had the webinar on...
Yeah, I mean, we just did the webinar on tape reading, and there are some obvious parallels there to that movie set, but there is just something about when you're tape reading, it just makes you feel like you're kind of stepping into this, different view of the market. It's certainly a lot of fun.
Yeah.
But we had a great webinar for it on Tuesday. Great attendance at BBT in the webinar room, so it was a lot of fun.
Amazing. Yeah, good on you. We got a really, really packed show this week. Of course, it was a terrible week. I mean, if you were an investor, pretty amazing week if you're a trader. Really scary stuff. And then this week, we actually added a new segment to the show called Ask a Trader, where you submit your questions and we answer them. So I'm really excited about this week's episode. If this is your first time watching this, please make sure to like it, subscribe to our channel, of course. Without further ado, let's get started. Brian, what a week. We are in correction territory.
We are definitely in correction territory. Looking for a bottom, but clearly haven't found it yet. I think we're gonna see a bottom eventually, but there's just a lot of negativity out there right now. But a lot of seasoned investors and seasoned traders say, you look for the blood in the streets, and that's when you get back in. So certainly lots of blood in the streets today, but maybe more to come. Certainly the close today didn't give us any indication that the selling was over yet.
Oh yeah, before we started recording, I was just telling Thor, we didn't even get a short covering before the market closed, so people are confident the sell-off will continue. Thor, from your point of view, what do you think? What's happening?
Well, if you're looking back at the SPY, for instance, the ETF, and how it's been tracking over the course of the past few months, I mean, first word that comes to mind is distribution. As you look at it over time, you'll notice that most of the green candles are on really small volume, and most of the red candles are on really high volume. So it just kind of seems like every time we started to sell down, our volume would come in, and we've been doing that for a very long time. I mean, since November, really. And back in the end of December, we had the Christmas rally, and it happened with no volume. The Christmas rally pushed straight up to all-time highs, but it did it on the weakest push I've ever seen in my trading career, which is, a little over 4 years at this point. And then we just started breaking the range down basically ever since. And today, like Brian was saying, no indication of what Monday will bring at the moment, because, I mean, we closed straight down. I mean, we got no bounce, no bump. No cover rally, nothing into the end of the day. I mean, maybe Monday, dead cat bounce, maybe we could look for. But, I mean, we pulled back, tested the average price, VWAP on the daily, and then just straight sold all day afterwards. So it'll be really interesting to see where we go. I personally feel like the market could easily go back down into the low 400s before we start truly hitting what I would consider to be like some kind of massive area, where I think like people who have been, because you got to think we were only in the low 400s like barely a year and a half ago, like a year ago. So it's not like we've got long-term participants that have been here for 10 years, 15 years propping this level. It's pretty short term. So, but I agree with Brian in the sense that I think we'll find a bottom maybe hopefully sooner than that. We do have a large value area, just looking at charts right now, coming in just under 435. So it's a couple bucks away. Huge value area that goes back through July. So that maybe we find some help there, I hope. For all those invested long, I hope that bounced for you. I'm liquid, so let's play it by day and have some fun.
Yeah, I think your point about it was funny because it made me think of some of the swing trade videos I've done over the last month or so, and I kept noting as the SPY was sort of breaking out, going higher, kept saying there's no volume. This is not the kind of move you like to see without volume. So it was sort of a harbinger of things that we were about to see. So
Yeah, always easier to see in hindsight, obviously, but but I think those signs were there, and unless you were being maybe a little too optimistic, I think there was definitely some telltale signs out there that things were going to at least struggle a bit.
Actually, there were signs. I think 3 episodes ago, we talked about how in 2018, SPY had a 10% drawdown. Same with 2016. So we kind of anticipated it. I mean, of course, we know Andrew didn't hedge his CNA position.
till later.
Till later.
Did we have any historical situation like this, that the interest rates are rising and we get such a pullback? I think, Adi, you came up with some, back in 2016 and 18, we had some sort of a drop. Are we going to see a 10-15% drop like back in 2016 or 18? Maybe we can put the charts later in the video.
Yeah, so this was something I mentioned in my session on Tuesday in the chat room as well. Like January is usually very more volatile on average. 2018, we saw a 10% pullback. 2016 on a bigger cap names, we saw a 10% pullback. This scenario here is very similar to 2018. Fed seems like it's kind of trapped. I saw it. But yeah, the writings was on the wall. But it's always very interesting. Every time market sells, the bears who have been hibernating, they come out, especially on CNBC, and they start saying, "Hey, this is going to be a 20% drawdown, a 30% drawdown." How deep you think this can go? I mean, I know you mentioned there's a value point at 435, so that would be about 15% drawdown. Brian, what do you think?
Yeah, I think that's, every time I post a swing trade video, I have to recalibrate my support levels, because every time I set a support level, the market goes below it. It breaks down and goes further down. But yeah, at some point we are going to see some support. The area that Thor pointed out is probably the next level that I would be looking for support. So it's
well, we got to think too, right? I mean, thinking of the bears, right? There is actually an interest in buying coming up very soon, which is profit, right? We have lots of bears with those selling that was going off. That was short selling coming in, most likely, right? So we do have bears that have now gotten a very sweet move and a very big drop. So if we do get a drastic pullback, that could certainly initiate a very aggressive cover rally that could get us back a good amount of that. So, but it'll be one of those things that we're not going to know it's going to happen until it begins to happen. And then you're just going to have to be ready to play. But we can't get too excited and try to anticipate that too early, because, again, who knows where this thing bottoms. But once it does, I do genuinely believe there will be lots of short covering. We'll get a nice good squeeze out of it for sure.
If you're an option trader, there's lots of really good strategies once we get that reversal. Like risk reversal strategies, selling some put, buying some calls, that could really make you a lot of money. So again, great time to be a trader. Tough time for a long-term investor. Yeah. Long-term investor. Yeah, some of the developers in our office, they all have retirement portfolios, and I see them just being around us. They check their retirement every day, and they're all getting nervous. And I tell them it's just a normal drawdown for now, nothing to be worried about. So it'll be interesting. But the sectors, of course, consumer discretionary got really hammered. I think down 8% for the week. Utility held up slightly, but still finished in red. Consumer staples, same. Energy had a really good start to the week, but closed red. That was shocking. What happened?
I don't think it was too shocking, actually. I think if you look at the chart of the XLE, which is a bunch of an ETF that has a lot of the large cap oil and gas players in it. I mean, if you look at the run that it's had over the last 2 weeks, I mean, it has had a monster run. And I was saying on some of my swing trade videos again, this is getting really extended. Some of the candles that had been putting in over the last couple of days were looking like it was getting toppy. And so, I think we're getting, again, we're getting a pullback because we had such a big run on energy. But you know, when you get into a market like this, there's just no place to hide. You know, it doesn't matter if you're, you mentioned utilities. Yeah, there's just no place to hide. You know, even the staples, you know, they just sell everything and ask questions later. Yeah. Part of it could be, you know, margin covers, you know, getting margin calls, that kind of stuff. But yeah, so I think, you know, there were two things that were going on with energy. So I still think the longer term trend in energy is up. But you know, this pullback could be an opportunity to either add back to your positions or maybe look at a ABCD pattern on a chart for energy.
Yeah, energy has been.
Yeah, I see that now that you're talking about that, Brian. Energy certainly, you know, I think the volume weighted average price on that was, you know, around what, $53, and that was only on December 20th. So in a month, you know, even with the sell it's had the past couple of days, it's still up $10, you know, XLE. So, I mean, it has been on quite the bullish run ever since it kind of went under the average price and then started to rally. So that certainly is quite interesting there. So, yeah, it was quite extended, wasn't it?
I mean, $10 is a lot on an index.
Yeah, but you know, if you,
I mean, it's a $50-$60 stock. 10, you know, that's big, 20%. You know.
Yeah, but if you look at some of the large caps that make up that XLE ETF, it's stuff like Chevron and ExxonMobil. And if you were day trading and watching the scanners, you were seeing those during this week, and particularly at the beginning of the week, you were seeing those names popping up. You know, on making new highs continually. So that's what was really kicking that into gear for sure.
Yeah. Speaking of, you know, bloodbath and sectors finishing red, let's get into earnings. Today, I mean, this video is probably going to be out on Saturday. So on Friday, yesterday, Netflix had their earnings. On Thursday, after hours, and then it was a bloodbath, 25% down. So basically, Netflix gave away every gain it had pre-pandemic. And like, if you look at it fundamentally, they've added over $1 billion, or I think about $5 billion in net income to their retained earning, and that's all gone. The stock is just lost all those gains. That was incredible. I know, Thor, you traded it, but what do you think?
Well, you know me personally. In this instance, I'm a day trader, so, and specifically an intraday trader. So I don't swing trade, I don't long term. So I pay attention to the price action as it is, and I traded it. So of course, naturally, after it opened and squeezed a bit, I shorted the junk out of it, and I rode it all the way down to 384. It was a really nice sell-off, you know, as people were starting to do that. But if you go back historically in time, I mean, Netflix, you know, it really has a congestion area that happens right around here. I mean, 397, 340. There's been a lot of transacting that's happened here. And today, interestingly enough, we picked up almost 58.8 million shares today, right? So we had the average shares traded on Netflix is somewhere around 5 million. So our vol today was on Netflix was what? Let me see, 1,458%. Was the RVOL on Netflix. That's a lot of volume at this level without a lot of selling. So I actually kind of have this feel like we're gonna get a gap fill on this thing really soon. I think Netflix is actually going to make new highs this next week, and I think it's gonna squeeze like crazy back up into this gap. Just looking at the volume. But that was way too much volume at this level for this thing just to go like that. Something else is going to happen here with it. I think it's going to come back up a bit.
Yeah, it was funny. It kind of just held that 380 level, and I was just telling Artie just before we started here, after it held that level and started creeping back up again, I actually sold some puts, some 380 puts that expire. They already have expired. They expired today, but I got a decent price for them. I think I got like 260 or 270, and I only sold a couple, but you know, they expired worthless because the stock went right back up to 400 after that. So yeah, those quick earnings plays are you know, when you get that overreaction to the downside, and then it sets a level where, you know, it's not going to probably go down any further. So that was my logic on that trade.
Well, and then again, anyone who is short in Netflix, you know, maybe back from, let's say, November, for instance, when Netflix was near 700, right? Anyone who took a short position in Netflix is having a very good time right now. Because they're buying back almost $300 down on their position. So you could see the squeeze just based on massive short covering. You know, if you had one of those big groups shorted into this thing, we're going to have some fun playing it the other direction.
Yeah. Tor, you know, that's very interesting how you said you're kind of anticipating a gap fill. In our podcast, I think Peter interviewed Andrew, who was an algo trader at HSBC. And so he was working at a sales and trading desk. And he was saying when an institution buy a security at a certain price, they really defend that price. So if a pension fund got in Netflix at 380, they're not gonna let it break 380. They're gonna defend it. They're gonna continue to add to their position. So you know, we might as well very likely see a gap fill in Netflix.
And the other
Well,
thing,
especially they could rotate out of other positions just to generate cash to try and prop it.
100%.
yeah, the other thing I thought was interesting today, because today was a huge option expiry day. I think there was probably the largest dollar value option expiry that's ever occurred in terms of value. And I, you know, I said in the morning in the show, or in our chat room, I said, you know, I suspected they were going to try to pin Netflix around 400 when it went out, and they got it up over 400 at one point, and I think it went out the day around 397, 398 sort of
Yeah, exactly.
area. So I thought, you know, for sure they were going to try to bring it back up and pin it at 400, which is, you know, you get a lot of option traders and other.
I mean, Brian, they almost did. I mean, after I got out I saw a large order coming in at 384, which is why I bailed at 384, because I knew we were going to squeeze. And when they came in, I took my last orders off, and then we went right back to 400 and started ranging on 400 and did that almost the whole day. It wasn't until an hour before the close or so that we sold back down, and then still almost got right back to 400 before we closed out.
Right. And
we closed out at like 390, almost 399.
Yeah, exactly. And that's the other reason I put that options trade on. I kind of thought, I had a feeling they were going to try to pin it at 400. And this is something that happens with options expiries.
We don't call them the prophet of profit for no reason.
I know. I was about to say, and you got paid. Yeah, exactly. Yeah, just for kind of perspective, the implied move of Netflix before earning was 6.5%, which is a lot, but it moved 25%. So even if you had a
that's a lot.
even if you had a non-directional option like a straddle, you would have made a killing. Like I set one up, but I didn't get filled at the price I wanted, so I missed out. But yeah, it would have been a real good time.
Would have been a good one, yeah.
I wonder if Nate took that trade from our chat room. He's the king of.
He's the king of going crazy on
the options.
Yeah.
Yeah. So next week, really important earnings. I'm just gonna read out some of the notable ones, and I would love to get your perspective on how you guys where do you think it will go and how you're gonna play it. Monday, we got IBM. We know IBM's been struggling. Tuesday, Microsoft, J&J, 3M. Wednesday, Tesla. I wonder how that will work out. On Thursday, I think on Wednesday we also got American Express, and then Thursday we got MasterCard, McDonald's, Apple, of course, and then Friday we got some energy plays, Chevron. Which one are you most looking forward to? Brian, I'll start with you.
Well, I think Tesla's going to be interesting. I mean, if for no other reason, Elon Musk may be on the call, and he's always entertaining, and people are going to be looking for possibly some new products. I think there's some expectation that they may roll the the introduction of the Cybertruck back again. So there may be another delay in that. So it's going to be interesting to see how the market takes his comments. Personally, I don't like to try to make bets on stocks going into earnings. So I look for opportunities after they've reported earnings, like I did today with Netflix. I did some last earnings season where a stock would pop up, make a high, and then start to pull back, and then I would short calls at just above that high, thinking that was kind of the reaction and then everyone was going to be selling after that. So I kind of like to play earnings after they happen, but it's just my style. Other people that I know will, they'll look at the probability curve of, like you said, 6.5% for Netflix. So they'll look at a probability curve and take the fifth percentile on either side and sell puts and calls, and hope they both, hope that the stock sort of stays in the middle. There's all sorts of ways to play earnings. So it's just the way I like to play mine.
Well, yeah, it's like one of the advantages to being a day trader is that I really don't need to know what's going to happen. Well, I just need to go with whatever's happening. So I'm kind of with Brian on that one. I normally don't overtly concern myself. Actually, quite the opposite, right? I'm kind of a buy the rumor, sell the news kind of guy. So generically, if earnings come out and they're really good, I'm gonna expect it to sell off. If the earnings are really bad, I'm gonna expect it to squeeze. Right. So it's, I'm always a contrarian in the market because it just seems to be that that's the way it generically works. But there are so many of these stocks, especially in tech sector, that I feel like have already started to sell now, but earnings hasn't come out yet. So I don't know if maybe we're kind of factoring this in a little bit. Maybe people are anticipating that these things are not going to be as so great. So maybe when the actual earnings come out, maybe those catalysts won't be as detrimental because I think people are kind of already bracing for the impact a little bit. I think, you've seen some companies like Piton have already started releasing stuff now because if they waited till another time to say what they're going to say now, it would have just crippled the company, not just fundamentally bruised it badly. But, you're starting to see even ahead of the earnings confessional, if you will, you're starting to, see some of these companies make announcements. But I think Piton, if any company, will kind of let us know that it's going to be really interesting earnings season because there's a lot of companies out there that you kind of would have thought, man, with the environment we've had lately, these companies really should be killing it. What's going on? Is there some other mix in here that maybe we're not prepared for? And, I think that'll have a lot to influence the future of the Qs and the SPY will be what we see coming out of those, Disney earnings, for instance, and, once all these other big tech giants start to really throw it out there. Gaming acquisitions, that's coming into play now. I think that's going to be really interesting. You've seen stocks like Activision and all of those just skyrocket on buyouts, and it'll be very interesting to see how all that goes.
Yeah. Did you play that, Brian?
What's that?
The Activision and Microsoft?
No. There's a lot of, it's funny because, the Activision Microsoft thing is a...
Pause. Do you play that?
Yeah.
I definitely played Activision.
Yeah. Oh, are you talking about actual games from Activision, or are you talking about the stock?
I definitely played. I played Activision long when that news broke.
Okay.
I made really good money on Activision.
Okay. Yeah, but it's interesting. They've got it discounted quite a bit, and it's the old antitrust thing, and whether it actually will happen, and when it's going to happen. 18 months, 2 years, it could take for anything to get resolved. So,
sure.
And I think that's why people are just saying, we're not going to, that's why it's trading at such a discount right now, Activision, is because it's, it's still, it's still so far out, people just don't want to have their money tied up. As it gets closer and it looks more promising, there'll probably be some arbitrage stuff going on, but right now it's just kind of dead money, and so.
Yeah, it'll be interesting. Before I move away from earnings, one thing I noticed is on Tuesday you have American Express, and then on Thursday you have MasterCard and Visa. So one thing you could do if you're an option trader like myself is you could set up your straddle strategies for Visa and MasterCard on Monday so you get some sympathy action. So if Amex do a really bad job, you'll probably see a sell-off on Visa and MasterCard, and you can capitalize on that before the market price it in. So that was interesting to me. I might do that next week, hopefully.
Yeah.
I need a good week, so next week better be a good
Next
week
week's Artie's week.
All right, yeah. So we're moving on to our next segment where we review what happened in Twitter, usually, or in a word of finance. This one's controversial, but I think I would love to get your opinion. We'll probably put a video of what happened if you don't know what happened. But Chamath Palihapitiya, who's a SPAC billionaire entrepreneur, I don't know, he wears a lot of hats, but he has I think 6 or 7 SPACs out there. He was on his podcast and he said he does not really care about the concentration camps for Muslims in China. It's below his line, in quotation. That's exactly what he said. And of course, it raised a lot of anger, and I guess rightfully so.
Nobody cares about. Let's be honest. Nobody cares about what's happening to the Uyghurs. Okay, you bring it up because you really care, and I think that's nice that you care. The rest of us don't care. I'm just telling you a very hard.
Wait, you're saying you personally don't care?
I'm telling you a very hard, ugly truth. Okay, of all the things that I care about, yes, it is below my line. Okay, of all the things that I care about, it is below my line.
Disappointing.
So Brian, what do you think?
Well, I mean, you could say, I mean, he's come out and said it, but you could say the same thing about Tesla. I mean, any corporation that's doing business in China is de facto supporting that regime in some way. I mean, I don't even like buying products that say made in China just because, I don't like the idea of supporting the Chinese Communist Party. I'm not saying anything about Chinese people. It's the Communist Party that I'm concerned about. So, and it's their policies that are in part responsible for this. So, I mean, like I said, he's come out and said that stuff. I mean, but you can take it back and just look at any company that's sort of doing business there, and this is the issue with capitalism, right? I mean, they don't, money is the most important thing, how we're going to make money, and that's, sort of other issues are, unless they're really pushed like the ESG stuff, it's just going to be, it's all going to be all about the money. That's just my opinion, but.
Oh, love to hear it. Yeah, Thor, what do you think?
Yeah, I mean, it's certainly, not an enjoyable thing to watch. I mean, all people, I suppose, are welcome to their opinions. It would not be one that I would support. I personally believe that everyone should have, I'm from America, so I want everyone to be free. I want everyone to live the lives that they want to live in the way that they want and have all the opportunities that they can. I find it discouraging. What I find discouraging is the lack of coverage and backlash to it. There are so many, it seems like we're so tipped on the line for certain types of, let's call it not nice speech, right? But then there's other kinds that are equally, if not worse, and those for some reason we're not focused on. And, if that person is going to represent a company and be responsible for representing that company publicly, then, my question is, does this person represent the views and the characteristics of that company? And I would like to hope not, because I really enjoy the company that he works for. But I'll have to leave that for them and see how it goes. I'm certainly will be, I'm not going to be doing any kind of long-term stuff, financially, probably with that ticker for a while, but it'll be interesting to see how it's super tough, touchy, getting in to some of the more like political kind of stuff with this. But it's, again, I just don't think it's appropriate for public discourse like that. I mean, on a podcast, and then again, no coverage of it whatsoever, no backlash, no sorries, misspoken, wrong thing. Just it's all right.
Yeah. I guess he said I viewed it again, I watched it again, and I felt like it lacked empathy. He didn't really apologize. He just said it lacked empathy.
Sure.
But yeah, when you're he's a part owner of a basketball team. He's on board of directors of multiple companies. I think you have to be a little bit more careful. I mean, even in this show, and we're not being sponsored by anyone, we're very careful. We might have different views, but we are, very careful of, yeah.
So.
Well, I think if anything at Bearable Traders and, at Peak Capital, we're in a very diverse and eclectic group of people. I mean, I'm a Southerner from Florida. We've got Vancouver, we've got Toronto, we've got Ontario, we've got Texas. I think we've got Yemen. We've got, we've got traders. All, we've got staff all over the world of all different cultural diversities, and we respect each other and value each other as individuals and people. And that's where we start first. Never to assume any one person just based upon their grouping has any specific type of intent. But what you don't assume is when someone comes out and says something blanket by statement, that's not an assumption. He's saying what he's saying. So it'll be interesting to see, if there are ramifications for that in the future, or if we just blow right through like we seem to be doing.
We've even got a Russian artificial intelligence man.
That's true. Yeah, you know.
It's true. We got our own Russian bot.
Yeah, Amen. Yeah, and Amen. Amen, you should come on the show. By the way, I know you're watching this. You should definitely come on the show. And
Amen needs to come on the show for sure.
And he's doing an amazing job with our stock trading simulator. We really thank him and Simon. Yeah, that's amazing. But in terms of Chamath, I don't know how much lower his companies could go. I mean, Space, SPSC is back to his SPAC price at $10. So how much more backlash can he get? All right, I think it's time for our new segments, and this is something that you guys talked about it in the comment section, and we brought it over. So I really appreciate all the feedbacks that you're giving us. This is called Ask a Trader, where you submit your questions, and we ask those questions to our experienced moderators in the chat room. So first question, this person's asking, one issue I found is that I got so many indicators, VPA, tape, CAM, pivot, Bollinger Bands, all running and different time frames. So his questions basically, what should I do to kind of narrow it down and get on track? He often finds himself that he's too focused on the indicators and forget about the trading.
Well, I think this really just gets back to your trade book and what are the specific strategies that you're using in your trade book. Does it involve Bollinger Bands? I mean, if it does, then you need to have that on your chart. Does it involve moving averages? Then you need to have that on your chart. But the important thing, and especially for a new trader or someone who's just learning, you can't overcomplicate things. Don't have 7 or 8 different indicators on your screen. It's just gonna confuse you, and it's gonna take your focus away from finding the trades that are in your trade book that you've got, that how you're going to trade when you see them set up. So narrow down that indicator list to 2 or 3, maybe 4 indicators. Like I use moving averages, the 9 EMA and the 20 EMA. I use the VWAP. And then I just watch price action and the time and sales and the level 2, and that's kind of all I use. You don't need to have 7 or 8 indicators on. It's just going to confuse you.
Exactly.
Yeah, I agree 100% with Brian there. There's a term that we utilize, and that term's called analysis paralysis. And basically, it's your question all. You just got so much stuff on your screen that it's connect the dots like a Rorschach test. It's an ABCD pattern. It's a head and shoulder. There's just so much stuff there. You just can't take it out. So I actually, Brian and I trade a very similar setup, actually. I actually do not have any moving averages on my charts. I do use a moving average cross indicator, which puts an arrow on my screen when the 9 and 20 EMA cross, which is what Brian uses as well. And that's a momentum indicator for me when the stock's rolling over. And I like to pay attention to that. But otherwise, like Brian, what I like to do, and my recommendation is, use whatever level correlates, right? So when you're looking at a stock, no one level will work on all stocks, right? So no one indicator will work on all stocks. You need to pay attention to which indicator is working. That's part of your job as a trader, is actually to look through your indicator and say, okay, every time this comes to the opening price, it rejects the opening price. Obviously, the opening price is in play. It is being defended. You will watch the opening price, and if your time and sales reads heavy selling there, your level 2 shows heavy bid to the downside, then you can say we're rejecting, short sellers are coming in to push the price lower, and you can short the tape, right? And then you get a beautiful move down. You get a 2 or 3 cent entry risk on what ends up being $1 move, and you make a lot of money and everyone's happy. But only after you identified which indicator was the indicator. If the stock's trending down, does it sell every time it pulls back to the 9? Does it sell every time it pulls back to the 20? There are algos involved. They will continue to do the same thing over and over again until they don't. So if you see that correlation consistently, that's the one, right? And again, that may not be the same indicator on every single stock you use. Different stocks use different algo programs with their market makers. Different sets are going in there. They're going to control. They're going to play differently. They have different participants, right? So they take on different personality sets. You have to pay attention to what works there in the moment.
Yeah, great answer. Yeah, very, very well said. And I think just to add on to what Thor said and Brian said, I think it comes from having too many indicators. I believe comes from not having a well-defined trade book. So if you have that trade book well defined, like for me as an option trader, I know exactly what I'm looking at. There's a few things I like to look at, and that's about it. So once you spend some time and like fine tune that trade book, then you'll see what are the indicators that you really need. But for sure, it's really difficult. And I mean, a lot of people like to make it a lot more difficult than it is. You got to keep it simple, right? Yeah. Next question, and I think this is more for Thor, I think, because you're the king of VPA. It says, does VPA work under all market condition, or are we seeing some technical work best at certain times for certain stocks, like meme plays where volume swells up? Volume swells up are obvious. What technical work best for choppy market? Cam pivots?
So VPA is VPA. It's all day, all the time, nonstop, no matter what happens, right? If VPA is not in play, neither is your stock, right? So you shouldn't be trading it. If you've got no volume, there's no reason to trade the stock. There are dozens of stocks every day in play with volume. Pick a new stock. If VPA is in play and if your market is stuck in a range, so it's choppy, cams are awesome. I use Camarilla pivot points. Basically what they do is they kind of try and mathematically quantify the ebb and flow of the market as we overreact to value. So as we go away from value, how far is it going to get before it comes back? Or how far is it going to go until it breaks away, right? So I am using those and they do help with ranges. But again, I'm going to kind of segue back to the prior answer. It's if you're playing a range, identify the range and then short near the top of it and long near the bottom of it. Don't long into the top of it. Don't short into the bottom of it. Let it break out, set a new range, test, create a new top, and then short, right? So it's all of these things are going to take patience to develop. But if you have a stock that's choppy and it's on low volume, don't play it at all. Like I said, I promise you, dozens of stocks every single day, throwing 10 opportunities a day for an entry. The one thing you can't do is get hung up on one specific ticker that you just love this ticker. I want to just trade this ticker. I mean, you can kind of do that with Apple. I mean, Apple kind of gives you something, except for today. But sorry for anyone who traded Apple. But for me, that's really kind of where you're going to be. Volume works all the time. Daily, like I said, we were talking about SPY. Volume let us see the distribution that was occurring on the SPY. 3 months ago starting. Today we can see the way it's selling off with confirmation. Volume gives us that on the daily, the weekly, but I use volume off of a 1 minute chart while I'm intraday trading, right? The small spikes and the anomalies that form within volume, those are the biggest hints we get because with volume, we actually can see a number of transactions at a specific level, so we can really figure out where value is because we can see where the participants are making the largest number of transactions.
There you go. Wow. You should PayPal Thor for that long answer.
Go to my Twitter at Thor Young. I'm going to set up a tip feature. No, I'm kidding. They actually have that now. They sent me an email. You tip on Twitter. I was like, oh, okay.
Brian, what do you think on that?
I bet they report it to my taxes.
I think Thor is certainly the master of the VPA, and I can't really add anything more than he's already said. It's everything I would agree with what he said. So yeah.
Yeah, there you go. So that's about it. If you have more questions for next week, any questions that you want to ask Brian, our guests, our moderators, submit them maybe in the comment section. While you're doing that, if you haven't liked this video already, make sure to do so. It helps the algos. It helps Thor. It helps me. It really motivates us. Make sure to subscribe to our channel. Gentlemen, any last words before we say our goodbyes and get ready for another massacre week in the market?
Well, buckle up. I think we're going to see a lot more volatility next week. We've got, like I said, we've got lots more earnings on deck, and it's the bottom's not in yet. You can start picking away, but watch for that day with the big volume flush, and then a return to the opening price. That's kind of an indication maybe we'll get at least some bottoming action for a bit of a bounce here. So look for that daily doji candle. So
amazing.
Yeah, for me, for all the day traders out there, put your hands together. It's hunting season, folks. We've been complaining for the past 3 months because we've been stuck in a kangaroo market bouncing up and down. Well, guess what? That's not today, right? We've had massive sell-offs. We've had huge volatility on multiple stocks. We've had plays left and right. We are here, folks. Earnings season's coming in for your day traders out there. For investors, hang on for a minute. It'll come back in a little bit, but day traders are going to get to play for a little while. Volatility is in. It's time to make some money, folks. So let's do this. Brian and I will hopefully be trading some opens together because I need to make some money, and Brian and I only make money when we trade the open together, and that's a fact.
That is a fact. Yeah, you could backtest that. That is absolutely a fact. Yeah. Yeah, that's awesome. Well, with that was another episode of After Hour with Traders. We'll probably see you next week. Thank you so much for all your support, your views, your comments. It means a lot to us. And enjoy your weekend because it's hunting season, as Thor said on Monday. Have a good one.
Have a good one, everybody.
See you in the chat.
Weekend.
Bye-bye.